You want to watch your metrics. Like everybody focuses on like win rate. A high win rate does not equal profitability. A high win rate equals, oh, I feel better about myself because I can be in the market and I win all the time. Or it seems like I win all the time, right? I've seen people that win 20% of the time and make a ton of money. And I've seen people that win 95% of the time and lose money. It's like that metric in isolation is not particularly useful to you. I mean, you see it pushed all the time in advertisements. This trade wins 80% of the time. Yeah, well, so what? Or this wins 95% of the time. Well, so what? If you win $100 90% of the time and you lose $100,000 10% of the time, that's the problem, right? The other metrics we want to look at is,
before we get rolling here, just a reminder to please like and share our videos. Your support helps us to continue to bring you the wonderful content that we share with you each and every week.
What's my average win? What's my average loss? What's my win rate? If you do the math on that, that'll give you your basically what you're generally going to make from a month to month, most of the time, for a month to month scenario. But that's not all, right? So you also got to think about maximum win. So I have these trading strategies that have profit targets. One of the things about profit targets is you lower a profit target, you jack your win rate, but it also keeps you from winning a lot of money when the conditions are right to win a lot of money, right? So that's an interesting balance. Like if I have an average win of $2,000, but once a year I win $20,000, that's something, right? On average, right? And that's, of course, how often does that happen? And then also, what is my maximum loss? Like if I have a trading strategy where I'm supposed to get out when it's down 5%, for example, but in some cases, we'll take the old condor, right? So the old high prop condor, right? So I have this high prop condor. I take 60%. Like if I get 60% here, then I have my profit target and I'm going to exit, right? So at 60. So basically, I'm almost never I might make a little more than 60, but if I'm actually percent of this number, right, which I don't know what that relates to here, but I'm going to take 60% of my credit. If I'm closing at 60% of your credit, I make it 62%, right? I'm not going to get like a huge win. I'm never going to make this. And if I'm losing, if I'm allowing this to draw down, or my exit is 1 times credit or 100% of credit, right? 100% of credit is my, which is 100% of this is my loss number. Then my strategy might have this like average win of, let's just say 60% of this is a 10% gain, and my loss number is twice that, right? No, it's not twice that. It's like 40% higher. So let's say my average loss ends up being like 18. Let's just say 20, just to make it easy. Average loss is 20%, and I win this trade like 90% of the time, right? And you look at the metrics, you say, oh, that's wonderful. Well, my maximum win is still only 10%. Let's say my adjustment strategy now is I come in here and we'll just say to the downside. It doesn't really, actually, we'll say to the upside because everybody's afraid of the downside, right? So my thing here is when I get drawn down, my 100% of the credit I have, I exit. Well, let's say I'm drawn down 90% of the credit. And my adjustment strategy is to, like, I can't just roll this back, because if I roll this back, it kills the trade and I can't make anything, right? So my adjustment strategy is to roll this back and double my size, right? So basically, if I do that, usually that actually increases my delta and it increases my structural risk in the trade, right? And I'm near my maximum loss now. I'm like 90% to my loss, right? So I do this, and then some good news comes out, and this gaps up into here, right? So now I didn't take a loss of, and of course I have a volatility crush, which makes it even worse. If I get outside my tent and I have a volatility crush, this thing just comes down. So let's say I'm relatively close to expiration, right? So right, that scenario might happen. It's like, this trade's been pressuring me to the upside. I put this trade on, it's pressuring the upside. I'm getting closer to my expiration point. Maybe I only go 10 days, but now I'm 15 days to expiration. And I roll out and I double size. And then I'm near my max loss. My position size has increased to the upside. I get a big gap in the marketplace to the upside. I get a volatility drop, and the T+0 line just freaking crushes out. Right? This happens. Right? So now I take a 3 times my credit loss. So I take my maximum loss was 20. I take a 3 times that, and I take a 60% of 60% loss on the trade, right? So now I have to throw that occasional, like, I don't know how often that's going to happen, but it's important. I got to throw that occasional loss back into the calculation and see what that does to the position. That might like kill me. And then I have to think about my financial and my mental capacity, right? What's it going to do to me if I have a 60% loss on a trade where I have an average win of 10%, which realistically they're probably looking at more like 5%, but that's going to take six trades of the same size to get back to break even, right? So I'm going to have, so when you look at the dynamics here, the trader's probably oversized in this because of the confidence he gets here, and he's won a bunch. So he's probably oversized in it in the first place, meaning if he just took an average loss, it would probably be problematic. But now I took like a 3 times average loss. So now mentally I blow up and I can't continue to trade that at the same size anymore, which means it's not going to take 3 average. No, I'm sorry. It's not going to take, I'm sorry. It's going to take 6 average wins, 6 wins to get back to break even at full size, average wins in a row to do that. Or if I've been trading this small and have recently escalated my size, I had 1 loss and I lost maybe 12 trade wins. So that's the dynamic going on mentally. Am I going to even be able to continue to trade this trade anymore? And the answer is like no. I would say 90+% of people in that situation are not going to continue to trade that trade. They have to scrap it now, right? But this is all can be foreseen before this ever even happens, okay? And I don't know how that hurts you financially. If you're like way oversized, that might kill you financially. For most of you, hopefully you're a little bit sketchy and not wanting to put in your full amount into these until you fully understand what's going on. But if you do that, that might even wipe you financially, right? So these are the dynamics that I don't like. On the other hand, like if I have that 90% win rate mentally does a lot to me. Like you're like, oh, it feels better, but I'm like, you're still going to lose at some point, right? You're still going to lose. And when you lose, well, first of all, if you're winning all the time, you get, especially if you're like just following rules and you don't know why, you get this confidence level that's really high. Like, this trading strategy is wonderful. Me as a trader, I'm wonderful. I'm winning. Like, I've won like 20 trades in a row. Most people will scale their size based off of their confidence rate level. So I have like an artificially inflated confidence level at this point because I've won 20 trades in a row, right? My 90% win times I win 90% of the time. I have this overflow confidence. So what tends to happen is now I'm like super oversized and I don't even think about losses anymore. It's like, yeah, I could lose, but yeah, how bad's that? Look at all the money I've made, right? So your size goes up exponentially, and then that whole scenario comes into play. Versus like a trade that wins like half the time, right? I win 50% of the time. My average win, and this is different ways of trading, right? I win 50% of the time. My average win is 100%. My average loss is, say, 30%, right? If I do the numbers on that, it comes out really good. The good part of this is I'm always aware I could lose. Why? Because I lose half the time, right? You don't want to get into this, oh my goodness, the trading strategy only wins half the time, and how, and I just can't deal with that mentally. It's like, this is like better for you. It's like you have if you win 50% of the time, you have full awareness you might lose, right? And it keeps your position size down. Like you're always aware of these at that point, right? So mentally, that's much, much better. If I'm increasing size, I'm increasing size with full awareness that, I'm only going to win half the time. And also, if I lose one loss, it's going to take me 3 losses to get to that 100%, 3 or 4 losses to get to that, my average win, which means I can make up 3 losses right away. And let's just say my maximum loss is 100%. So say once in a while, if things go crazy, I lose 100%. I can make that up in one trade. And let's say I also let my profits run because, letting my profits run is going to lower my win rate. But it also allows me maybe a maximum win. Maybe sometimes I make 300%. See how those dynamics might play out, and how once you get over the fact that you're going to lose sometimes, this trading strategy is going to make you a shit ton more, and you're probably going to stay much more responsibly sized because of all this awareness that you have and your confidence level not necessarily getting out of control. It could still get out of control and you can still run into problems here for sure. But the whole dynamic, right? And it's not necessarily a bad thing, right? And you're probably going to make more money this way. If that's your goal. I don't know what your goal is, right? Your goal to win most of your trades, or is your goal to make money? I don't know, right? Those are two different goals that you might have into play, and they always don't always combine with one another. It's like I can create trading strategies that win like 98% of the time. It can literally do that. But the laws, but in that scenario, it's like a blow up trading scenario. When it eventually it loses, if you're trading long enough, eventually you're going to get nailed on it. When you get nailed on it, how bad is it? That's what you need to ask yourself. And we've seen like literal hedge funds blow up because they're following that principle, right? So we want to make sure that those all come into play.